Sudhir Rajkumar, UN Staff Pension Fund representative of the Secretary General, a big market voice joining us on the show today. Sudhir, morning. It's a pleasure to have you in ET now. Tell us how the experience has been in the Kotak Mutual Fund CFO Colosseum 2018 edition so far, for which you've come down to India.
It was a very interesting experience. I had the opportunity to interact with a number of corporate CFOs and got a good sense for what business in India is thinking at this time. So it was a good opportunity for interaction.
Okay. So tell us, Sudhir, considering you would have a close eye on that, what is it that you believe are going to be the repercussions of the US-China trade war and what it could do potentially to the global economy? Because part of the currency weakness we're already seeing play out, not just because of the trade wars, but also because of Turkey's economic crisis as well. Where do you think this situation is really headed?
Yes, I think the most important structural change in the global economy that is currently taking place is the reversal of quantitative easing that had been going on for the last 10 years by the US Federal Reserve System. Over the last year or so, the US Federal Reserve has started raising rates, and it has also started to take out some of the liquidity that had been pumped into markets. And that, coupled with the strong growth in the US economy, is causing some concerns in terms of potential impact on the markets.
Good morning, Sudhir. What impact will the US trade war have on global trade expansion? I think that's the key worry point right now.
At this point in time, I think the effort seems to be to try to reduce some of the imbalances that have come about as a result of trade deficits among some of the major trading partners. The sense so far is that I think the trade wars might be a little bit of an extreme characterization, and there is a certain amount of tension on the trade front, and there's a certain amount of negotiation that is taking place. From what I understand, at this point in time, the consensus still is that these are things that will be managed through negotiations. There is, it's important to watch these carefully, but not to get too alarmed about it at this point.
You know, the US economy is well placed compared to other economies currently. For how long do you think this growth will sustain? How will the rise in interest rates impact the current growth environment?
Certainly, the fact that there was a significant fiscal stimulus provided by the current US administration makes it much more difficult to interpret the real economy data coming out of the US. At the same time, it seems that there is significant strength in the US economy, certainly relative to other parts of the world. So far, the increases in interest rates by the US Fed don't seem to have had a major impact, although there is some impact being seen in the interest rate sensitive sectors, house buying, cars, and so on, which is done on credit in the US. It'll be important to see how this plays out over the next 12 to 18 months. But it's also important to remember that the full effect of the tax cuts still has to be seen. There is a fair amount of that still in the pipeline, and we need to make sure to see how that works out over the next 12 to 18 months.
Okay. So how is it, Sudhir, that you propose one approaches the rising interest rate scenario and across the globe, like you rightly said? How do you think it will impact the other global markets?
Well, it's important to remember that globally, certainly interest rates are going higher in the US, but that is not the case in other parts of the developed world. And also there is no major move towards significantly higher interest rates in emerging markets. So in general, the consensus is that for the next 1 to 2 years, interest rates are going to be higher in the US, possibly marginally higher in some major markets, including perhaps India, but not really in the rest of the world. It's still a relatively limited move in terms of interest rates.
So what view and tactical position are you currently taking on the global bond rates and markets?
We are fairly comfortable with global bond markets at this point in time, especially long rates. Our personal view is that long rates in the US are not going to back up very significantly from where they are now. So although we are generally, of course, across the board, there is some increase in interest rates, and we are marginally underweight global bonds, we don't believe that they will rise significantly higher from current levels.
Right. You have 60% allocation in equity for the last 3 to 5 years. Do you have any valuation concerns in the equity markets globally right now?
I would put it a little differently. There is certainly concern about valuations in equity markets. However, we are very long-term investors, and since we basically have to meet our liabilities, we have a long-run real return objective, that is net of inflation, of 3.5% in US dollar terms. We can only achieve that by diversifying broadly and being fairly significantly exposed to equity markets. So although there may be some concern about equity valuations at this time, we on a very long-term basis expect that whatever bumps there may be in the road, we will be okay in the very long term. And when I say in the very long term, I'm talking about 10 to 15 years.
Okay, what are your main concerns in allocating funds within the Indian region?
Well, we are always looking for good investment opportunities, and we do invest globally, so we have to look at our portfolio in terms of allocations to different parts of the world. Certainly I would not say that we are pessimistic about India. We are long-term quite bullish on India. We just need to find the right investment opportunities. We are always looking for them, and we invest both in public markets as well as in private markets, so private equity, real estate, as well as global public equities, and we'll continue to do that in India as well.
Okay, so they're like other pension funds. Are you also looking at investing in hard assets in India along with equities?
Yes, certainly we are looking at those areas in addition to equity markets.
Okay, and how is it that you would rate the earnings reform and economic progress in the country in the last 3 to 5 years?
I think I would restate what I've said before, that we are long-term bullish on India. Certainly India has currently got the highest growth rate anywhere in the world of any major country, major economy. I think the foundations are being laid for strong future economic growth. There are certain short-term costs associated with laying those foundations, but the long term looks certainly quite attractive.
Which are the major trends in the world with great potential for long-term investment according to you?
Well, one major trend that we are seeing and we are capitalizing on is certainly the developments in the technology sector. So tech sector companies have done very well, and so there is always this debate about whether some of that is real or some of it is just fad, and we tend to believe that it's all actually very real, partly because what is happening is that technology is now seeping into every sector of the economy, and of course that will create disruption in various sectors, but it'll also create a lot of innovation, and it bodes well for the tech sector in general. So we certainly think that that's an area that is worthy of a close look.
Okay. Sudhir, thanks very much for joining us this morning and sharing with us your investment thoughts, not just in India, but across the globe. We really appreciate your views and your insights.